analyzing Bitcoin's recent market movements, technical insights, sentiment trends, and strategic perspectives. Bitcoin's recent price action, which fell below the symbolic $100,000 mark to around $96,000, has created a mix of panic and speculation across the cryptocurrency market. While this may seem like a significant setback to the untrained eye, a deeper analysis reveals a predictable correction within the larger macroeconomic and market framework. This article delves into the technical, behavioral, and strategic aspects shaping Bitcoin's current trajectory, providing insights for seasoned investors and industry participants. 1. Contextualizing the price correction. The behavior of market participants plays a key role in amplifying Bitcoin's volatility. Last week's move above $100,000 was considered a historic milestone. This week's drop below that level has triggered emotional reactions that highlight the human tendency to overreact to price movements. A classic psychological pattern is evident here. Investors anchor their expectations to the recent high, viewing any deviation as negative, regardless of the overall trend. Technically, $100,000 serves as a psychological and technical benchmark. A once resistance, now potential support. Historically, key resistance levels have often turned into support when broken. The weekly close will be crucial in determining whether $100,000 can hold as support. The possibility of reclaiming the $100,000 mark by the end of the week remains viable, fueled by both speculative activity and institutional interest. 2. Institutional and retail investor behavior. Contrary to the perception that institutional investors are more sophisticated market participants, recent behavior suggests otherwise. Institutions have exhibited a pattern of buying during rallies and selling during dips, mirroring retail investor behavior. The positive inflows into Bitcoin ETFs over the past 2 weeks underscore institutional confidence in Bitcoin's long-term value proposition, even as short-term volatility leads to reactive selling. Retail investors remain a significant market force, although they are often driven by emotion rather than analysis. Many retail participants liquidate holdings during downturns, only to regret missing out on subsequent rallies. The contrarians and long-term investors may view the current dip as a buying opportunity, reinforcing the saying, "Buy when there's blood on the streets." 3. Bitcoin as a strategic asset. Lessons from El Salvador. El Salvador's Bitcoin strategy offers a compelling case study in disciplined accumulation. By purchasing 1 Bitcoin per day, El Salvador can effectively mitigate the impact of market volatility. Reports suggest the country is leveraging international loans to shore up its Bitcoin reserves, representing a bold but calculated bet on the asset's long-term value. El Salvador's experiment highlights Bitcoin's potential as an alternative reserve asset. A Bitcoin allows smaller countries to assert financial independence, challenging traditional institutions like the IMF. While volatility poses risks, the potential for outsized returns over a decade justifies the approach for some. 4. Supply dynamics and market fundamentals. Bitcoin's limited supply of 21 million coins reinforces its value proposition. Long-term hodlers, significantly limit Bitcoin's liquid supply, reducing the number of coins actively traded. The impact of trading activity. Price movements are often magnified by the small percentage of Bitcoin actively circulating on exchanges. As adoption accelerates, Bitcoin's limited supply can cause sharp price swings. Large-scale institutional purchases further reduce available supply, amplifying price swings. The rise of retail participants during historical bull cycles coincides with supply shortages, driving price spikes. 5. Historical trends and 4-year cycles. Bitcoin's price action has generally been consistent with its halving schedule, where the mining reward is reduced every 4 years. We are about a year away from the expected peak of the current cycle. This puts the market in a late accumulation phase, followed by a parabolic rally. Previous bull markets have experienced 30 to 40% corrections, suggesting that the current 10 to 11% decline is relatively mild. Implications for the next bull market. The ongoing consolidation phase sets the stage for a potentially explosive bull market. The analysts predict Bitcoin will reach $150,000 to $200,000 in the current cycle, depending on macroeconomic stability and sustained adoption. Potential for altcoins to rise. Historically, altcoins outperform Bitcoin in the late stages of a bull market, fueled by speculative enthusiasm and relevant narratives. 6. Altcoin market volatility. Altcoins have mirrored Bitcoin's decline, with some experiencing large losses. Large losers. Ethereum, Solana, and Cardano saw weekly losses of 10 to 25%. These fluctuations reflect the industry's increased sensitivity to Bitcoin price changes. A volatility opportunity for investors. Significant drops in high-quality altcoins provide attractive entry points. Major altcoins show varying degrees of resilience and risk. A Solana testing support at $180, its ability to hold this level will be crucial for its short-term trajectory. With strong support near 70 cents, Cardano could offer a low-risk accumulation opportunity for long-term holders. Emerging narratives for altcoins tied to gaming, AI, and decentralized finance, DeFi, are poised to benefit from renewed speculative interest in future market rallies. 7. Macroeconomic and regulatory considerations. The Federal Reserve's monetary stance has a significant impact on Bitcoin and other risk assets. While the pace of rate cuts has slowed, the broader trend of monetary easing remains favorable for Bitcoin. A short-term market volatility driven by Fed announcements often presents opportunities for contrarian investors. The changing regulatory environment will shape the trajectory of Bitcoin adoption. A policy-friendly with clarified guidelines for Bitcoin ETFs and custody solutions is likely to attract more institutional participation. Overregulation remains a concern, especially for decentralized platforms and privacy-focused cryptocurrencies. 8. Investment strategies amid volatility. Navigating the volatility of the cryptocurrency market requires a disciplined approach. Allocating investments across Bitcoin, altcoins, and stablecoins reduces risk. Maintaining liquidity to buy dips ensures preparation for sudden price corrections. Long-term focus. Taking a multi-year view is essential to capitalizing on Bitcoin's potential. Accumulation strategy. Dollar cost averaging minimizes the emotional impact of short-term fluctuations. Aligning investments with broader macroeconomic and technology trends enhances portfolio resilience. 9. Strategic outlook for Bitcoin and beyond. Bitcoin's current drop below $100,000 is a temporary setback in a still robust long-term trajectory. With accelerating institutional adoption, growing supply constraints, and macroeconomic drivers favoring risk assets, the overall outlook for Bitcoin and cryptocurrencies is extremely positive. For investors, the current correction is an excellent opportunity to accumulate high-quality assets at discounted prices. By maintaining a disciplined approach and focusing on long-term trends, market participants can position themselves to capitalize on the transformative potential of this asset class. As the market evolves, adaptability, sound decision-making, and resilience will be key to navigating the complexities of this dynamic ecosystem. The journey to Bitcoin's next milestones promises to be both challenging and rewarding.